Hello and welcome to Mint. I am Nasrin Sultana and this is All Things Markets. There was a lot of euphoria built around the budget announcement which scrapped the DDT or the dividend distribution tax. But analysts say that InvITs are not going to be positively impacted by this change in the policy. To understand how it's going to impact InvITs and what's the way forward, I'm joined by Shubham Jain. He is the Group Head and Senior Vice President at ICRA. So Shubham, welcome to the show.
Thanks, Nasrin.
My first question is, what is your outlook on InvITs now?
See, InvIT as a product has really ramped up well in the market, in the Indian market, and it was a very Indian specific product. If we see globally, we don't have a product like InvIT. Like REITs is a globally accepted product, but I think here the SEBI and regulators did a lot of work to customize this product to the Indian requirements. So till now it has done very well till it hit a bump in the recently announced budget related to dividends. More about it maybe in the later part of our conversation.
Right.
But if you see overall over the last 2.5 years, they have mobilized around I think 250 billion rupees, around 25,000 odd crores. And there is a huge pipeline of InvITs issuances which as per our interactions with various investors, issuers, which are in the pipeline and in very active stage of discussions. One of the biggest InvIT which everyone is watching out for is from NHAI, which is National Highways Authority. Again, we all know that they have huge funding requirement. Right. They are doing their Bharatmala, which has outlay of more than 5.5 lakh crores. So I think in addition to what TOT, HAM, etc., what they are doing, if InvIT also they are successful in coming out with, that will be a good addition to their funding channels.
Any numbers that you are working on as what kind of money that can be expected to be raised through InvITs?
See, overall, if we see the exposure to the infrastructure sector, so as per the broad numbers that RBI releases also, so the total debt which is currently outstanding on infrastructure sector is around rupees 16 trillion.
Right.
Out of which 10 trillion comes from the banking and balance 6 from NBFCs, debt, mutual funds, etc. Now, assuming a very ballpark debt to equity ratio of 3:1, which goes for any infra project. So when we are saying that 15 trillion of debt, that means 5 trillion of equity would have gone in conceptualizing those projects. And assuming almost maybe 30 to 40% of those projects would have got operational and stabilized, where actual demand is there from investors, because they don't want really to get exposed to any execution risk. They want stable operational projects because they are looking at a very, very stable and steady return. So what we are thinking and what we are analyzing is that out of operational portfolio of maybe 6-7 trillion, around 2 trillion odd will hit the market over the next 5 years. And out of 2 trillion, almost 30 to 40% of that will come over the next 12 months. Subject to the clarification on the dividend which has recently been announced.
Right. InvIT is basically something which is related to infrastructure, and the companies raise money through this instrument.
Sure.
Do you think that this instrument will still be a successful mode of investment 5 years down the line? Why I'm asking you is because the economy is not into a great shape.
Sure.
Economy is sagging, the numbers suggest that.
Sure.
Also, the kind of stimulus that most investors were looking for in the budget, those were missing.
Sure.
How do you estimate this 2 trillion money in the next few years? Because infrastructure as a sector has not grown that much.
Okay, so I think it's a very valid question, and just to I think put something in context, InvIT as an instrument, even for the retail investor or the equity investor, is very different from other equity instruments.
Right.
Like maybe one is going for IPOs or corporate equity, etc.
Right.
What I say in my language, it's an equity product with debt-like returns.
Right.
Okay, so it's a very complex product, and that's why the initial 2 publicly listed InvITs have also not done well, where there was a euphoria of the expectation that it will give similar returns as some equity IPOs, etc. gave.
Right.
But now we are getting a very, very steady and stable and long-term financial investors who are coming and who want to invest in the Indian story. You have rightly pointed out, currently we are going through a bumpy macroeconomic environment. But if you see overall, if we take data maybe for the last 2 decades, the traffic has grown at a CAGR of around 7.5%. Okay, so we are not saying that that kind of growth can be replicated in future years also. But if 7.5 also goes down to 5 or 6%, that is the growth which one is talking about. Plus, in addition to that, for a toll road, you also get the toll rates increases in line with the inflation. So even if inflation is 3-4%, so every year one is talking about a growth of at least 7 to 8% on a CAGR basis for next 20-25 years, right? And then you have debt which is coming at a lower cost, which increases the IRR for the equity or the like unit investors.
Right.
So definitely it will have its own challenges, it will have its own blips, but I think the investors, the maturity which they are coming in and the kind of expectation they are coming in, I think they very well know that India as a market should continue to grow.
So you're basically saying that in the long term, infrastructure or InvITs is a better play, because in the long term probably this infrastructure will have its good returns. That's what you're saying.
Yes, and good returns also one should distinguish, again as I said initially, that it is not like any
not an
corporate
equity product, of course.
So good return for these investors is even 11-12% is a good return for them on an IRR basis.
Right.
So that I think there are a lot of investors. We have seen Omera coming in, we have seen Adia coming in, CPPIB is putting in a lot of money. So that's a very, very good and patient capital.
Confidence in the sector.
Yeah, and the quality of capital is very good.
Right.
They are not like just fly-by-night operators who see some blip and just exit.
Right. So banks and NBFCs, they have over 90% exposure to infra lending.
Yes.
Also, a few of them have turned into NPAs.
Also, sure.
So what is your assessment of this situation where the banks are stuck into a debt situation?
No, see, definitely I think that is one grey area where product like InvIT may not help much, because as I said, the investors in InvIT don't really want to go into under execution projects. And that is where the major NPA problem is. So we did a study also 2 years back, which told us, the observations which came out, that most of the issues happen during the execution stage.
Okay.
Once the project becomes operational and it gets a better maybe refinancing done of a longer term debt at a lower cost, even if the revenues are not as per what they have initially estimated, even then they are able to survive. Now the challenge comes when the project is not even able to complete.
Okay. Yeah, that's when the banks are also
stuck. Where banks are stuck. So there I think InvIT as a product may help that of the same developer, if they have some operational projects, they put it in InvIT, raise money and put that money back into under construction projects. So that kind of deficit trust and cycle of money and the deficit trust, like today banker is saying, as a developer, if you are not putting your contribution, why should I be expected to put mine? So you bring your own, you show the commitment, and I will be happy to match the contribution.
Right.
So that's the cycle and that's the confidence I think it will build in.
Right. So, about the budget, there were a few announcements which kind of is a hindrance to the InvIT's future. So, what were the announcements which kind of you think that will have an impact on InvIT's performance?
Sure. So, there were 3 key announcements which happened in the budget. So, first, which was a positive announcement, which exempted all the sovereign funds from any income generated from Indian assets, infrastructure assets. So that would mean a fund like GIC, which is from government of Singapore. Right. So if they invest and earn any income, so they will not be taxed or there will not be any withholding tax which they have to pay here. Now, which is a positive, so it will attract a lot of sovereign funds if they find India as a conducive market, so they will definitely come in. Second, which was slightly negative, was the abolition of DDT, which is on general basis, it's a very good announcement, but specifically for InvIT, because InvIT as a structure was a pass-through structure, which means what? That the subsidiaries pay dividend to the InvIT, and InvIT pay dividend to their investors. There is to shareholders. There was no dividend tax at all in the entire chain, so they were exempted. Now this dividend tax is exempted for everyone. So the competitive edge which InvIT was having earlier, that is diluted. So now they are on the level playing field. And which is majorly negative is the introduction of tax in the hand of the investors, and which get taxed now at their marginal tax rate. So if there are HNIs or even any like middle income kind of person who is invested in InvIT, so they may have to shell out even 30-34% of as tax on the dividend income, which is hugely negative, because earlier there was a slab that till 10 lakhs of dividend there was no tax at all.
No taxation, right?
Yeah. So that is, I think, where there have been representations to the government, and there may be some action on that.
All right. On that note, Shubham, thanks a lot for talking to us.
Thank you.
So according to ICRA, around 2 trillion money could be raised through InvITs in the next 5 years. He thinks that in the budget announcements are a mixed bag for InvITs, as the sovereign funds may find attractive in investing in InvITs, but the higher tax incidence may be a spoil sport for the retail investors looking to buy into InvITs. We'll see how this policy change pans out for InvITs in the future. We'll come back with more details. That's all for now. For more updates, stay tuned.